All right, the Airbnb investor market is over in 2024. And if you don't believe me, just listen to what we're talking about today on Wednesday's Real Talk on Real Estate. Hey, everybody, Jerome Maldonado, and I want to talk to you guys a little bit about what is crushing the recessionary market right now in the single-family residential industry and leading the recession in both residential and commercial real estate, and it's the Airbnb market. So the Airbnb world has changed entirely since September of 2023 as we migrate forward. Now, let's learn a little bit about this. Now, according to Airbnb corporate office, they had the largest second half of largest second half of 2023 was their second largest revenue producing half of a year that they've ever had since the inception of Airbnb. But where is this news coming from that Airbnb is getting crushed? And where it's coming from is New York City is where it originally started. Now, there are some clauses that are happening nationwide to prevent people from buying single-family rental homes, whether they're short-term or long-term. And one of the things that I want you guys to pay attention to right now is what's happening on a local municipal level and how this is being affected and going nationwide on a governmental level that the feds are trying to regulate as well right now. And so when I talk and think about entrepreneurship and the way the market should be, I think about free enterprise. And yes, I think there should be some type of regulation. But if you look back and you look at America, and America is structured so there's no monopolies, right? Now there's some sectors like Boeing airplanes, right? There's two major airplane manufacturer in the entire world. Is it an entire monopoly? Well, no, not exactly, because there is other airplane manufacturers. Just so happens that there's two large ones that dominate the market and everybody else kind of dwindles behind them. Airbnb for short-term rentals is obviously the Coca-Cola of the short-term rental market, right? There's a lot of other ones, but they are the Coca-Cola. They are the Cadillac of GMC, right? They are the echelon of short-term rentals. Now, one of the big things that's happening right now is that New York City in September, new bylaws came out. And here's why these bylaws came out. One of the things that they wanted to do is they wanted to put restrictions on short-term rentals. Now, there's 4,000 applications that have been put in September for short-term rentals, of which only 300, that's right, 4,000 applications went in, of which 300 have only been approved. So that is less than 10%. That's like an 8.5% approval rate in the short-term rental space. And the reason that they're bottlenecking short-term rentals in the New York market is because you take submarkets. You take a market like Brooklyn. And Brooklyn, just over the last 10 years, where it was a 60% African-American population, is now 40%. The white population has increased by 20% in that exact same market. And where it was once the suburb area, it's no longer the suburbs anymore. It is pushing out demographically pronounced area. It's pushing out demographics that once were dominating that area. And so what's happening right now is that we're starting to see the migration of money come into the inner city areas and start to take over. Now, that's not the only reason. So there's not a lot of land left in New York. And so that's just one example of what's happened. And it just shows you guys what the massive need is in New York City for real estate. And one of the big things right now is that there's a housing crisis. And I've been talking about this housing crisis for months and months, and for the last several years, actually. And I've been telling people since 2019, I said, look, guys, there is a housing shortage. Buy land, build houses. Buy land, build apartments. We have at least a decade. And now from today, 4 years later, 5 years later, we still have a decade. And so point being is that there's a massive need for housing, and in the inner city more so than any other area, because there's no more land. And when there's no more land, there's only infill. When there's only infill, you either have to scrape and blade and rebuild like we're doing in Kirkland, Washington, because it's so densely built with all the employees from Microsoft, from LinkedIn, from all the employees from Google, from Kirtland Brands and Costco, and all the other tech industries. It's the tech capital of the world. The only thing that we can do is scrape one single family home and build 4 to 6 on one lot. And in New York City, the same thing is happening. But the governor of New York City is sitting back saying, okay, guys, we're going to halt Airbnb because if we put stress on entrepreneurs, on short-term rental owners, which is total bullshit in my opinion, because I just think about how hard I've worked over the years. And nobody works harder than an entrepreneur. I'm sorry. The people outside that are shoveling and picking dirt, digging trenches, they work hard. But they have stability because they get a paycheck every month. The volatility of the market in the entrepreneurial world is the hardest thing to weather over the course of the last 30 years of life. And yes, we have dominantly just went up, and there's been some peaks and valleys through those up climbs. No one's feeling sorry for us, and I don't ask anybody to feel sorry for us. All I'm saying is that in entrepreneurship, which if you're watching our channel right now, there's a good chance that 80% of you guys are self-employed or aspiring to be self-employed, and all bullshit put aside, being self-employed is one of the hardest things that you'll ever do in your whole life. But I've got to tell you this, it's so worth it. But when regulations come down and they say we're going to put downward pressure on real estate investors so that way they are forced to sell their properties, that to me is borderline against our Declaration of Independence, right? Because as independent entrepreneurs in a capitalistic world, we sit back and we say, okay, I'm going to go buy a piece of real estate. I'm going to take my hard-earned capital that I made either as a doctor, as a trade professional, electrician, a plumber, doing fix and flips, or as a teacher, or whatever that industry might be that you're in. You take that revenue, right, that you've saved up penny by penny, and month by month, dollar by dollar, and you invest it in an asset. Now, that asset is supposed to be cash producing. You do your homework, you study your parameters, you take your worst case scenario, and you say, I got it covered, Jerome. I implemented everything that any investor should be implementing. We give you a thumbs up, you go and purchase it, and then all of a sudden a local municipality comes down and says, we need more housing, there's not enough. I'm going to put downward pressures on you folks that have worked your ass off to go out there and put together a portfolio of real estate in spite of it being abnormal, right? Like only 3% of the population does this. 5% tries, 3% succeeded it, and 1% gets ultra wealthy. The other 97%, they just make a living, month to month, paycheck to paycheck, and they work for somebody else. And the thing is that they go in and they put downward pressure on the upper 3% or really 5% of people that are just trying to make it out there, right? And what most people don't realize is that 3% of the population and the small business owners employs 85% of the worker bees out there. And so if 3% of the population employs 85% of the population, why would you put downward pressure on them? Don't you think that puts downward pressure on businesses as well that may have portfolios and compromises median jobs for people that are just working class professionals? And I shouldn't say just, because these people are needed just like everybody, right? And so I sit back and I go, okay, let's evaluate what's happening in the short-term rental industry. Now, the American Trades Act of 2023 is proposing that any investor that owns over 10 single-family homes as an investment, is going to get taxed hard. Now, if you own 70, you're going to get really taxed hard on your houses. So what's this going to do to the single-family long-term rental market? And what they think is that the solution is to free up invested homes that people are renting, and that's going to make more homes available in the market. That's bullshit. What's going to put more homes in the market is getting trade professionals taught how to go out and become professionals in the trade and building more homes. Embracing the fact that blue collar trades need to be embraced, because in the school systems I came from, the trades were never embraced, ladies and gentlemen. And I'm telling you guys right now that it's a time, and we're in the era that the trades need to be embraced, because where doctors are still vastly needed and still not getting treated correctly in regards to their financial return, the drug industry runs them. The same thing is happening in the trade industry, where we're going in and the trades don't get the respect that they honestly deserve but they're finally starting to get compensated. And so you blue collar professionals out there that friggin' hated school and just wanted to go into the trades and didn't want to become an attorney or a doctor or a teacher or something else, it's now the time to start migrating towards the trades, because as we start seeing downward pressure on like short-term rentals and all the investors and stuff out there, listen up, ladies and gentlemen, it's time for the blue collar trades to be able to come in and dominate. I was raised in a family that taught me that I shouldn't go out and get into construction because only non-educated broke people got into construction, and that would be my demise if I went into a blue collar trade. In fact, that would be my punishment if I didn't go to college, was I'd land up in a blue collar trade, or at least that's the way I was raised and taught. And rightfully so, my parents just wanted me to have an education. But truth be told, it made me wealthy. Had no idea. In fact, I was embarrassed that I poured concrete for the first 10 years. I had become a millionaire buying land and building houses. And I remember when people ask me what I do for a living, I would joke with them. I'm like, I make money doing dirt work, or I'm in the dirt industry, right? Because I was buying dirt and I was building houses, but yet embarrassed. And I was probably at that time worth $7, $8, $9, $10 million, but still embarrassed that I was in the trades because I didn't feel that it was rightfully respectful as it was with my pharmacy degree that I had, but I wasn't utilizing. It's right there behind me. Okay. So ladies and gentlemen, understand that the blue collar trades today need to be pressed, and we need to fight. When we go into the legislative session in February, we need to fight for capitalism and push against laws that don't support short-term or long-term rentals. So understand that right now in the market, one of the biggest things that you need to be able to depict is where you want to be. Do you want to be on the receiving end of entrepreneurship, or you want to be on the giving end of employment, which is okay. Both are okay. But you just have to decide what side you want to be on. But understand that those of you guys that select being on the employment side, the 3% of the wealthy employ 85% of you guys. And so if you don't support what has brought revenue to this country for the last 100 plus years, I think we're going to be really between a rock and a hard place in coming future years. So just understand that with short-term rentals being on the brinks of what's happening in the real estate market, in spite of interest rates getting ready to drop, it's still going to take 2 years to weather. The storm is just at the forefront in commercial real estate. The short-term rental industry has only been under attack for about the last 4 months. And how we migrate into the legislative session in February and March of 2024 and how we support our investors is going to depict how the future looks for short-term rentals, long-term rentals, and your future investments. Ladies and gentlemen, thank you guys for following this content. If you guys want more content just like this, then click and subscribe to our YouTube channel, pound that thumbs up button, and I look forward to seeing you guys next time. Until then, go out and compound your success.